Hi, my name is Surabhi Upadhyay and I'm here with a quick CNBC-TV18 market nugget. Those of you who invest or trade in the stock market would have noticed that bank stocks, which actually take the market higher, leading most stock market rallies, have started underperforming. The market hit its peak on the 20th of July. That's when the Nifty nearly touched the 20,000 mark. But since then, markets have cooled off a little bit and bank stocks are actually leading this decline. The Bank Nifty, which is made up of key blue chip bank stocks like HDFC Bank, ICICI Bank, SBI and many others. Now this index has fallen twice as much as the Nifty in the last 1 month, with the fall actually accelerating in August. So the question is, why are bank stocks falling? Well, I can tell you 3 reasons that are leading to this fall. The first, high inflation. Consumer inflation rose to a shocking 7.44% in July thanks to surging vegetable prices. This high inflation means that the RBI probably won't be cutting rates anytime soon. And it's this new tough reality that traders are now pricing in. The Reserve Bank of India was quite clear in its August monetary policy that it needs to fight inflation and bring it back to the central bank's comfort zone of below 4%. This new reality that interest rates will probably stay higher for longer is leading to a rise in bond yields. In fact, the benchmark India 10-year bond yield is now trending above the 7.2% mark, and many expect it to rise even further. When bond yields rise, bond prices fall, and that is bad news for banks because their trading or treasury profits get hit. So that's one key reason why bank stocks are in a slump. Let's come to the second. Falling margins. Banks saw their net interest margins fall more than expected in the first quarter earnings season. The fall was anywhere between 5 to 35 basis points. The reason is that banks have had to start increasing the interest rates they pay on deposits. Now, you and I know that FD rates have gone up in the last couple of months, and that's good news for us depositors, but not such great news for bank profitability. The third reason why Indian bank stocks are falling is actually global markets, global volatility. Persistent inflation and the possibility of US banks being downgraded by rating agencies has put global markets on the edge. In addition, China's economy hasn't exactly lived up to the post-COVID reopening expectations. In fact, China's exports fell a whopping 14.5% in July, which is the steepest drop since February of 2020, just when the pandemic struck the world. China's unemployment rate among the youth, which is an age group defined as 16 to 24-year-olds, surged 20% in June. The country has actually stopped reporting this number July onwards. So how is all of this linked to our banks? Well, all this global risk-off sentiment tends to impact foreign flows coming into emerging markets like India. It's actually beginning to show up in numbers as well. India got a staggering foreign inflow number in the equity market, anywhere ranging from $5 billion to $5.7 billion every single month in May, June and July. But this number has come down to less than $100 million as of the middle of August. So these are the 3 key reasons which are leading to a sell-off in bank stocks. But hey, worry not, all is not gloomy. Banks have actually displayed strong business growth and stable asset quality in the first quarter, which means that business is growing without the fear of more NPAs or bad loans. In fact, rating agency Fitch says the operating environment for Indian banks has strengthened as economic risks linked with the COVID-19 pandemic have ebbed. So for all we know, this weakness in bank stocks may just be a passing phase. Watch this space for more market insights. See you next time.